Welcome to Netaji Subhash Open University. We will be discussing the applicability of interest and penal provisions under the Goods and Services Tax Act as applicable in our country. Friends, the application of interest or the levy of interest definitely is not a very good subject to discuss. But unfortunately, this becomes a mandatory clause whenever the person providing any service is actually making a default in depositing the tax amount to the government exchequer. So, when the law has been drafted, it's understood that there may be a situation or there may be multiple such situations where taxes which should have been deposited to the government account has not been deposited, or it has been deposited delayed after 2 months, after 3 months, or some input tax credit which I am not eligible, I have actually availed that. So, incorrectly I have availed some input tax credit. All these cases, the government is actually the loser because they are not getting their proper taxes. And that's the reason for such a default or such a failure, interest is going to be levied as per the provisions of this law. Now, if there is a delay in deposit of the taxes, let's speak about the late fees first, and then interest, and then penalty. What about the late fees? The late fees primarily applicable if the return, because we know that under GST law, there is a GST return 1, GSTR 1 need to be submitted by 10th of the next month. So, April month's return to be deposited or uploaded electronically by 10th of May. And the net payment for that month of April to be uploaded finally after netting off of all adjustments in the month of May, that is the next month, by 28th through a return form called as GSTR 3B. If there is a delay, in submitting these returns, as well as there are lot many returns, like there is a return called as annual return in form number GSTR 9 with the reconciliation in form number 9C, if there is a delay in submission of that forms or that return, there has to be a mandatory interest or late fees. Now, what's the amount of late fees? The law says that if it is an annual return in form number 9, GSTR 9, and if you are making a delay in submission of the return, you are liable for a late fees for every day of delay of rupees 100. So, in other words, if you have delayed your return due date is 30th of June. If you have submitted by 30th of July, every day delay multiplied by 100 rupees, you need to pay a late fees charges or late fees to the government. Okay. And there is also a late fees to be paid to the state goods and services tax of another 100 rupees. The law says that the maximum late fees of rupees 5,000 rupees for each return shall be levied subject to this delay of certain period of time. So, the persons who is actually liable for the taxes and compliance thereof should be extremely careful about these delays and should try to avoid such delays as applicable from time to time. If the returns have been deposited or uploaded, but there is a tax which remains failure, means the tax has not been deposited, return uploaded, but there is a default of taxes, or you have incorrectly availed input tax credit, that means you are supposed to pay 100 rupees taxes to the government, you have incorrectly availed some amount of input tax credit, or there may be a situation where you purchase a raw material and then the raw material is actually used for the exported goods or exportable goods on which the tax rate is 0 or nil tax rate. What will happen? Proportionate amount of input tax credit need to be reversed. Proportionate amount of input tax credit that you have already availed need to be reversed. That means you have to surrender. If you do not surrender, or if the person who is providing the supply or providing the goods or services fail to reverse this input tax credit, the person shall be liable for interest at the rate of 18% per annum for the in respect of that amount which is in default for the period, right, he has not paid. That means if the due date for payment is say 20th of the next month and he has paid, corrected his return somewhere after 2 months, for that particular period interest need to be paid. That's the very dangerous issue so far as the GST is concerned, because the interest late fees is something like mandatory. That's really okay. But what is more dangerous now? The law says that there may be a number of situations where the person may commit a default. The person may commit a default. What is default? Default means the person who is supplying the goods or services actually committed certain default, right, as per the statute. What is this? Number one, he has issued an incorrect invoice, the invoice which is not in line with the GST provision. Number two, he has taken input tax credit in respect of certain goods or services which he or she is not eligible. Number three, the person has availed a credit, utilized it, but the finished goods is exempted from taxes because of so many reasons, maybe export. That means the law says you have unjustifiedly availed credit. Fourth, you have falsification of documents. That means you have falsified, fabricated some of the documentary evidences, the inputs, the books of accounts, the electronic cash ledger, the electronic credit ledger, something you have done. Next, the authority has asked you certain details and you fail to give the details, or you have willfully suppressed that details. I repeat the word, willfully suppressed the details to be given to the government. In all these cases, you made a delay in GST payment to the government account. You have suppressed the payment. That means you have collected the money from the customer. You billed 100 rupees plus 18 rupees, 118 to the customer. Customer has paid you 118 rupees, right? 18 rupees you have actually collected but not deposited to the government account. In all these cases, these will be treated as a person or the event in default, and penalty followed by prosecution shall be levied. Friends, if the tax paid after the due date, the law says it will be interest at the rate of 18% per annum. Dangerous provision subsequently. It says that if the excess input tax credit I have claimed or excess reduction in the output tax, my output tax liability should have been 100 rupees. I have willfully reduced and shown 70 rupees. That means I have willfully suppressed the tax liabilities. The law says it is a punishable offence and it should be levied with 24% per annum, and also it should be levied with a penalty, and the volume of the quantum of the default is too high, we will be levied with charged with prosecution, right, imprisonment. Friends, this prosecution, imprisonment, the tenure of a jail, whether it is bailable or non-bailable, whether what legal argument can be contested before the court of law against such situation of prosecution, we discuss it in another chapter that's called the penalty and prosecution. But please remember, if the two fundamental question or fundamental issue in this particular chapter which says very clearly that if you have deposited the tax delayed 18% per annum interest, however, if it is the ITC you have taken, the input tax credit excess claim you have taken, or you have reduced your output tax excessively, unjustifiedly, willingly, intentionally, the interest rate shall be 24%. And this interest plus fees plus penalty followed by, depending on the magnitude, volume and recurring approach, the prosecution. These are all the stringent provisions under the GST law. Thank you, my friends, for this particular session.